and take it away.
All right, thank you, Allison, and thank you for coming to the June Director's Cut. We're talking about April 2016 production, and it's going to be easiest to kind of run through the statistics using our theme of the month, which I chose the good, the bad, and the ugly for this month, and there is some of each. So rather than go topic by topic, I thought I'd cover them under those highlights. Under the good, I think you got to start with gas capture. Gas capture stayed above 91%. We actually only flared 9.2% of our natural gas in April. So statistically, we're hanging well above the current goals and regulations, and we're really making progress on capturing and marketing natural gas in North Dakota, even in the face of some pretty low natural gas prices and a 20-to-1 ratio between the oil and natural gas. When you look at the second thing that's good is that for the first time since September of 2014, we actually saw the rig count increase. We're up 1 rig from May to today. So that's a positive. Not a huge positive, mind you, but at least it indicates that we're at the bottom. And with prices increasing and a 1 rig increase, that's some good news. That's the last piece of good news I want to talk about is the price increase. You can see that it's up almost $5 a barrel North Dakota Sweet from May to today. And we have been above the $40 West Texas Intermediate price target for putting inactive wells back in production now since April 11th. So we've got a little less than 30 days to go before we hit that 90-day mark at plus $40 WTI. And we're seeing that reflected in some statistics. I had some information from the Williston Job Service people. They have seen an increase in postings. They've had several requests by workover rig companies to post jobs and help them hire people. So there are orders by oil and gas operators to put wells back on production, to replace the tubing, replace the rod string, and get wells back on production. So we should, within the next month or so, start to see that inactive well count reverse. And as you saw on the page, we're at a record number of inactive wells. I think it's 1,590. So we almost topped that 1,600 number. I suspect we will before we actually see that reverse. But we're at the price target and very near the 90 days. Bad news, we could not hold above $50 WTI. It lasted less than a week, and that's the price level that we have to sustain for 90 days before people work really seriously on the non-completed well count. You saw that it was down a little bit. I think just people reflected in some people looking for some cash flow, and also people just using that to manage their business process. But we're not going to see serious erosion of that 900 non-completed wells till we stay above $50 for 90 days, and we just couldn't hold that price. The world market wouldn't support it at this point. Also on the bad news front, on the federal activity, there's still significant activity. June 3rd, EPA published its new source performance rule for methane reduction, and it also published its plans for an information request and looking at methane emission reductions for existing sources. So the initial rule was for new and modified sources. The information request will go out. I heard that it's going to be in excess of 20,000 of those are going out to industry, and that'll be looking at existing sources. North Dakota is reviewing that new source performance rule and seriously considering filing a what's it called? A petition. I got to find it here. Petition for review. We have to August 2nd to file that. And so that's what we're looking at. Finally, on the ugly side, a couple of things. Let's start with Williams County. 0 drilling rigs in Williams County today. And we have not seen that since October of 2008. So it's been 8 years, really, since Williams County did not have an active drilling rig. And that's a very significant thing to have 100% of the rigs exit the county. Looking back at that, that was the time period in that first 2 years after the Bakken was really discovered with the modern technology. And Williams County wells hadn't panned out at all yet. This was prior to the Brigham exploration well south of Williston that really started the whole multi-stage fracking, high proppant volume, high frac volume surge that brought all of western North Dakota into the productive category. So first time since October of 2008, no rigs in Williams County. And I saved the ugliest for last, 70,400 barrel a day drop in production from March to April. And that is the largest production drop we have ever had in the state of North Dakota. I think that, you just can't really ignore the significance of that factor. The previous largest drop was in December of 2013. It dropped 50,000 barrels a day from November to December of 2013. And when I look back, that was an extremely cold and snowy and windy month. It was, we had temperatures reaching the minus 40s that year in December of 2013. And it was largely weather related. So what is going on between March and April of 2016? And I don't think you would consider this normal. I don't anticipate that this would be the beginning of a trend or that we're going to see additional months with this kind of drop, and here's why. There are three factors involved here. The biggest one, obviously, is lack of activity. Very few completed wells. I believe we had 41 wells, or was it 44 completed? I forget the number. It's right in that neighborhood, and I'll look for it in a minute. But we also had road restrictions on for the entire month. It was a warm month in April, and so road restrictions went on early, and so we had road restrictions on for the entire month of April of 2016. And then lastly, it surprised me, but it was only 2 months ago, when we looked at weather conditions in April, 15 out of 30 days were too windy to complete wells. And so not only did we have road restrictions on and we weren't able to move oil, we weren't able to move water, there was little movement of frac sand or frac fluids, but 15, roughly half of the calendar days in the month, the wind was 36 miles an hour or higher, sustained winds, and no capability to frac wells. So I think because of those other two factors, this was an abnormally high production drop. I would not expect another 70,000 barrel a day drop, but it was the one we were kind of waiting for as we saw rig count, drop below 30 and well completions well below 50 for several months in a row. We were expecting a large production drop, and it arrived. So that's my presentation, and I will take questions.
The very first question from the webinar is in regards to the methane regs. Any idea what impact that would have on production if the regs were to go into place?
We haven't gotten that far into the analysis. Our comments and our analysis so far have dealt with interference with North Dakota's ability to do gas capture and to enforce our rules and regulations. And what we have discovered, we've finished our review of one of the four rules and determined that it would run completely counter to our gas capture rule, which allows flaring of the gas for the first 14 days of the flow back, and then somewhat restricted flaring for 90 days, and no restrictions on the first well in the spacing unit. And the EPA rule uses things like technically feasible to put the well into a gathering system, technically feasible to put the well through a separator. It doesn't fit with our rule at all. And so we're going to have some jurisdiction problems. But we haven't done the analysis to look at the production impact. Just know that there would be a huge impact on us regulatory-wise. You can kind of figure out where that's going to lead.
Could you explain to folks, maybe more of our national audience, what road restrictions or, I guess, load restrictions are?
Oh, certainly. Yeah, that's something that is probably unique to northern climates. During the winter months, we have frost form in our soil and subsoil starting probably in November and running through February. And when that begins to melt in the springtime, the soil, the roadbed becomes very, very soft and has lots of water in it. And in order to protect our paved roads and a lot of the gravel roads, the counties and the State Department of Transportation restricts the loads that semis can carry. And oftentimes, a semi that would normally carry 105,500 pounds is restricted to half or less of that. So it becomes really hard to even move water. A full truckload of water would violate the road restrictions. So it's all about protecting the roadbed from permanent damage. And it's because we have frost that goes deep in the ground, 6 to 8 feet into the ground.
So then that in turn means what in terms of production? That impacts production because companies can't move oil.
Great. So, so it impacts production several ways. One is you can't move workover rigs. So if a well goes down, you can't put it back on production. If you wanted to frack a well, you couldn't mobilize a coiled tubing unit or a workover rig to do the frack. You can't move the big heavy pump trucks or the sand trucks or haul the water for hydraulic fracturing. So it really limits any kind of work you can do on the well. And then secondly, we still have, I think in some counties, half or maybe even more of the oil and water that are trucked to market. And those truckloads become much, much smaller to where a truck can't even completely fill in order to travel over the roads. So it limits production from existing wells as well.
Oh, okay. Since you brought that up about workover rigs, it just struck me, how often do you see workover rigs have to go to a well? How often do wells fail?
The question was the failure frequency on wells in terms of production, and the average, once a well is cleaned up and stabilized, is about every 3 years. A major workover has to be performed to replace tubing and sucker rods and downhole pump. So, but during the first 2 years of the well's life, in the Bakken anyway, it's much higher. It's anywhere from 6 months to 12 months is the run life, because there's sand flowing back, there are offset wells being fractured, and so these wells are very temperamental in those first 2 years. So probably in the first 2 years, 1 to 4 mobilizations of a workover rig, and then after that, 1 every 3 years.
Anything?
Yes. As far as I believe that the Federal Reserve is meeting today regarding to spike interest rates or not, and you're talking about oil prices, depending upon that decision that's going to be made later on today, how that impacts and what would that mean either way it goes for oil prices.
Sure. So the question was the Federal Reserve meeting and the discussion over interest rates and how that might impact oil prices. For them to not raise interest rates would be a big positive for oil prices. It would mean that they're going to allow the dollar to weaken a little bit versus other currencies, and there's a 1 to 4 benefit there. So a 1% decrease in the value of the dollar typically results in a 4% increase in oil prices, and that might be just the dose of medicine we need to reach that $50 mark, because we've been hovering just below that. That might just be the little dose of medicine we need to get over that $50 mark and stay there for 90 days.
With 0 rigs in Williams County, how does that bode for McKenzie County at the board?
Well, McKenzie County is the least impacted so far by the drop in rig count. It still has seen an 84% drop in rig count. I take that back. Dunn County only 74%. But McKenzie County in the core and northwestern Dunn County in the core look very solid. And when I looked at Fort Berthold activity, and I kind of forgot to mention that under the goods, they actually gained 2 rigs and proportionally had a 10,000 barrel a day production drop, but proportionally much less than the rest of the state. So that part of the state is still doing okay.
What about the drilling slowdown? What kind of effect does that have on gas capture, or has it had any effect on gas capture?
Well, the drilling slowdown has really helped the processing and gathering people catch up. And so I think a little later here, you're going to see Justin's graph, and it's going to show consistently that they're gaining on the well connections. It has not helped a lot with that hardcore group of connected wells that continue to flare, but production decline is working in gas capture's favor there. Not necessarily good news. That's a good news, bad news story. But the drilling slowdown has really helped people to focus in the core area with gathering systems, and compression, and gas plants, and to get caught up on well connections.
Okay, a couple of these next questions we might have to look up, but I'm going to ask you just in case you know it. Last time natural gas production decreased.
I don't remember that number, but we'll certainly get back to them. Yeah, that is something of note, and I thank the webinar attendee for bringing that up. Natural gas production actually dropped March to April, and that's unusual because thinking back over the last 5 or 6 webinars, they've all been increases in natural gas. So we'll look that up, and Allison will put something out on that.
Same question, kind of similar question on the March to April drop. Did we see less production out of old wells than in previous months? So was the previous month supply being propped up a bit by production out of old wells?
Actually, we saw a production increase from our legacy wells, which was somewhat of a surprise. So previously in, let's see, I guess it would be March, the legacy vertical pools produced 52,000 barrels a day, and that jumped up to 53,400. So it was small, but we actually saw a bit of an increase there from those guys. And I think I can attribute that to some of the acquisitions going through. And so some of the new operators actually took full control of the wells, and they were able to get paperwork approved and get some well work done and do some work out there on those old water floods and that sort of thing. But tiny little increase, but on the legacy side, production was up. On the Bakken and Three Forks side, it was way down.
You talked about how you don't think this drop is a trend, but with this drop in April, do you think we will drop below that magic 1 million barrel a day mark sooner than early 2017?
Great question, and yep, I think that's in the mix. I really think that it's going to be very, very hard for industry at these kind of drilling levels and at prices below the $50 mark. It looks almost impossible to stay above 1 million barrels a day till the end of the year. So I think we could see us drop below 1 million barrels a day before the end of the year.
Do you think that'll happen continued for production in the May-June months, or does that kind of depend on the duck count and the new well count?
I really think May could be another down month. June, July, August, September typically are up months, and based on the $40 WTI and the demand for workover rigs and for crews, I think we're going to be able to stabilize or maybe slightly increase production in the June, July, August, September timeframe. At least stabilize it with small decreases or small increases. But after that, we'll just have to see what the price has done.
With dropping below the 1 million barrel a day, how does that affect budget projections?
We actually have that built into the current revenue forecast that came out in January. Fiscal year, we're going into fiscal year 17, anticipates an average 900,000 barrels a day. So that is built into the current revenue forecast. What continues to be a struggle is to figure out what the sales tax numbers are going to look like with prices too low for fracking activity. And with the price reductions that industry has built into this thing, the sales tax per well is actually going to be down because lower cost wells will pay less sales tax. It's maybe not thought about, but it's just intuitive. If you can drill and complete a well for $7 million instead of $10 million, it's going to pay significantly less amount of sales tax.
Okay. Do you have something else?
Yes. You may have mentioned this, I'm not sure. As far as rig counts go, do you see it staying around the upper 20s, or do you see it dropping again?
Yeah, the question was projecting rig counts, and we think that we stay at this number in the 30 range, probably through this fiscal year. It again entirely depends on oil price. The NYMEX strip says that we see that 90-day above $50 in the fourth quarter of this year, and that we actually start completing unfracked wells in the fourth quarter of this year. But it doesn't project the $60 target until well into next year. So it looks like it's a 30 rig count plus or minus for a year.
Okay. Well, I am not seeing any more questions from the webinar. So
thanks, everyone.
We'll wrap it with that, and
we'll wrap it, and we'll wait for Mr. Kringstad. We had to go out for a breath of air.
Stepped out for a minute, so.
I took a shower last week.
There he is.
All right, thank you, everyone.
You're up, JK.
Your turn on the grill.
Try this new system out here.
People are having problems logging on, so some questions from the email, but
Oh, there you go.
There we go.
All right, JK.
All right.
Away.
Good morning, everyone. Justin Kringstad, Director of the North Dakota Pipeline Authority. We'll get started right into some of the updates on the midstream side of the world here in the Williston Basin. So just taking a look at production, we'll skip forward to slide 3 right away. Again, you can see what's been happening in the neighboring states with eastern Montana as well as South Dakota production, again, all sharing the same transportation network. So we see production slides continuing in those states as well. When we look at April transportation out of the region, crude by rail, that percentage has gone down even further, more market share going towards the pipelines and being refined within the states. And we'll touch on here in a moment what some of the market conditions have looked like and some explanation to why we're continuing to see barrels moving on the more traditional pipeline routes. Historical trends, again, you can see pipeline in blue, rail in purple. Again, mostly market driven in these cases. Again, we've not in the recent term had any major pipeline expansions or new projects, strictly market conditions driving these barrels towards the pipeline destinations versus the coastal rail destinations. When we look at estimated North Dakota crude by rail volumes, again, down substantially. You can see the last 6 months or so, a very significant downward trend, now below 400,000 barrels per day estimated to be leaving the region by rail. where those barrels are heading, the remaining barrels on the rail network, again, things are continuing to head mostly to the East Coast primarily, and then followed up by the West Coast. You notice, though, the green line, those are the PAD 1 or the East Coast refineries. That has been starting to diminish in comparison to some of the West Coast, the PAD 5 movements. So again, we'll continue to monitor this. It's very helpful for us to have a better picture then of where these barrels are headed for a more holistic look at the transportation dynamics. Pricing as of March, this is on slide 8. Again, taking a look at those different PAD regions. Again, PAD 1 on the East Coast, PAD 5 on the West Coast having the highest priced markets. PAD 3, a little bit softer prices than historically. Typically, I would have expected a little bit higher PAD 3 pricing than what we saw in March. But we'll continue to watch that to take a look at what PAD 3 looks like long term with some of the price dynamics down in that region. And where we sit today, just over a $1 spread as of this morning between Brent and WTI. So again, nothing is indicating to me any type of major shift back towards the rail in these market conditions. We're not seeing production increases. We're not seeing market spreads widen. So again, all that would indicate to me that we're going to continue to see pipeline be the preferred route for majority of the barrels out of the region. And then slide 10, again, for accounting purposes, taking a look at movements cross-border with Canada by truck. Again, we're continuing to have more imports into North Dakota than truck exports into Canada. So again, those are barrels that are shuffling across the border for primarily marketing reasons and or blending with the different specs north or south of the border. And again, slide 11, Lynn alluded to the lower amount of flaring in the month of April, and so you can see again that breakdown. And so where we saw the shift was actually that blue piece of the pie was consistently hovering around 3%. The blue is wells that were not connected to a pipeline, and so that has actually shrunk down now to 2%. We're staying at 7% March to April on the amount of gas being flared from wells that system issues, getting all the gas into the pipeline network. And then as far as gas connections, again, continuing to outpace the completion activity. So again, that's allowing wells to get connected at a faster rate than wells are being completed. And so again, that's good news in the fact that they're doing some catch up on wells that had been previously missed in prior months that were needing to be connected yet. Slide 13, I just wanted to quickly update everyone. I know this came out on Monday. This is WBI Energy, their Valley Expansion Project. I just wanted to present this and open myself up for any questions if there were any. But on Monday, WBI Energy announced a binding open season, and so basically what that means, potential users of this proposed pipeline would then have the opportunity to sign up for capacity and sign up for use of this pipeline system between now and July 15th. It's a 38-mile, 16-inch pipeline system. They're initially proposing 40,000 decatherms per day. When you convert that into volume, that's roughly 40 million cubic feet of natural gas per day, was proposed in service of November 2018. And so this was the map that was provided in their press release and in their open season documents. But if we take a look at on slide 14, this maybe paints a little bit better picture as to the necessity or some of the need for this project. And so if you look at eastern North Dakota, if you're familiar with the geography that's down in the southeast portion of North Dakota, the purple line that you see, that's the existing WBI pipeline system. You notice that it stops just before it gets to the Fargo area. You'll also notice they call that their Cheyenne subsystem. So from Bismarck, North Dakota in the center, everything east is dependent on volumes moving through Bismarck area going east. And so they have had issues being able to expand further east in North Dakota because their system just simply wasn't built large enough to handle it. So by tying into the Viking line that you see in western Minnesota, that would allow additional supply into the eastern portion of the WBI system, which would allow for additional economic growth in that area. It would provide some additional security, supply security, that if there were an incident east of Bismarck, they'd be able to flow from both directions on that system. So there's a lot of very good positive things that could result, again, should shippers sign up and decide to support this project. So.
And this is processed gas, correct?
Correct. This is dry gas. This is not produced. This is not something that's going to address flaring. This is geared towards the consumption side, the retail side of the world. So with that, I'd be glad to answer any questions.
If I could follow up, then this dovetails into the study the legislature is doing about trying to find a way to get natural gas supplies to the valley into some unserved regions.
That's one potential. So the question was, there's some local activity in North Dakota taking a look at how to get natural gas to unserved communities. And so this could be one potential supply source for areas in eastern North Dakota. Again, if there's any communities that run by this, if there's spurs or different pipelines that could potentially be built off of this, there's a lot of opportunities. But again, we'll have to wait to see how this all pans out.
Any thoughts on why there was a shift in rail transportation from East Coast to West Coast?
No. So the question, taking a look, again, I don't have that detail of analysis, taking a look at exactly what individual refiners were doing on the East and West Coast. So at this time, I don't know that I can provide a whole lot of insight as to what specific refiners are doing and why we saw a shift from the East Coast to the West Coast. But again, it's going to be market driven, but that's about as detailed as I can get right now.
And this is probably the same type of answer, but I'll let you answer it. Does crude by rail, do you view that it's having peaked with new pipeline capacity being added?
As far as the being peaked, I think that I don't anticipate us getting back to the volumes that we had seen in previous years. So especially with Dakota Access coming online potentially at the end of this year and going forward in some of the other pipeline projects in the queue, I don't anticipate we'll get up to those high volumes again unless there was a real major market shift or system disruption with the pipeline network.
On Dakota Access, though, it's still waiting for permits from the Corps, correct?
I believe there are still some additional federal permits required for certain segments of it. State approvals have all been done and construction has begun.
Okay.
Any word on the Northern Pipeline that the name?
That's Sandpiper?
Sandpiper, yes.
No, so the question was if I'd heard anything new on the Sandpiper. Today I don't have anything new to provide on that system.
And what would be an optimum transportation mix between pipeline and rail? I'm just curious if you have a number in mind.
No, so the question was, does the Pipeline Authority have some type of optimal mix? I would say no. I don't know that we've ever formally tried to calculate what is optimal. I think the optimum system would be a safe, reliable system that's going to get crude to premium destinations. And so and having that get done by pipe, if rail is part of that mix, we will see.
There was a reason I asked that question, just to follow up. The Public Service Commission's approved a couple of pipeline projects which seem to be enhancing from production to rail facilities, or rail transload facilities. And I was just curious if that goes into the mix that way.
Correct. And so, yeah, we're seeing some additional intrastate systems that are getting built, either to pipelines, traditional pipeline systems, or to rail. And so going forward, whether those barrels leave by rail, whether that rail facility acts even as a storage and a marketing hub. So we're starting to see some more flexibility and some more interconnectivity out in the play.
I guess bottom line is demand, business decisions drive that.
Correct. Market conditions will decide, again, where that barrel ultimately ends up, and so whether it's in a pipeline system or one of the rail networks.
Okay, that seems to be it. So thank you, everybody. I will look into the last time gas production decreased and get that sent to everybody.
Thank you.
And the recording will be up shortly. Thanks, guys.